with IPOs, it doesn't matter whether it's mobility or whether it's Lyft or Uber or anything else. If it's something you want to be in, you probably want to be in on the IPO price, and you can't be. So do you buy it in the aftermarket today, John?
I think so. I mean, Lyft is an incredible American success story. The company, in just 7 years, has gotten to $2.2 billion in revenue. It's hard not to be excited about it. They continue to invest. It's founder-led. And those guys are pushing execution, pushing innovation. I think it sets them up well for the future.
How should we, it's the endless question, and I think Andrew's still listening. We always ask this question, Andrew, and that is, do you not price it as high as you can get it so there's some aftermarket demand? Or if you do that, do you leave some on the table for the founders? Or what's the ideal price for something like this? Not too hot, not too cold, something that's just right. Are they succeeding?
I think, in terms of pricing, I think today it'll trade well. There's a lot of appetite for this company. It's very well known. I think the fact that they're getting out first is great. It's a consumer company. It'll drive awareness. It'll be good for their business. And I would expect this company to trade well.
The valuation went, it's supposed to be 18 now. It's what, 22?
24.3 on the post-money.
I mean, if it was 30, that'd be too high. I mean, there's a number that's too high. Are you sure that we're not there already?
I mean, just here in New York alone, ride-sharing accounts for over 50% of the overall transportation dollars.
Are you answering my question about value? What was that? I'm asking you about. I know what the company does.
It's really a TAM question. Like, what's the
what question?
A TAM. Like, what is the overall market for Lyft? And mobility is an enormous market, and these guys have just started innovating. They've come out with scooters.
When you have two companies that are competing so harshly, and you are basically losing money every time anybody takes a ride. How do you get to profitability? Does it take a different type of product that they have to get into? Do they have to branch out from here? Or can they actually make this profitable just on this part of the business alone?
So Ernest just came out with a report which shows that Lyft has doubled their market share versus Uber since the 2017 issue that Uber had. Which
is great, but it says to me that you're not seeing any one of these companies go away anytime soon, so they're going to have a major competitor.
But I think what comes next is you layer in additional services and products that make their transportation network more revenue, more dollars per ride, higher margin, and that's the beauty of these kind of marketplace models.
Hey, John, what does that mean, though? Because unlike Uber, which has pursued things like Uber Eats and is talking about all sorts of other types of not just transportation, but true services, Lyft has really tried to portray itself as a pure play transportation company. So when you talk about what those other services are that you'd layer on top that would put it into a profitable category, what are you looking at?
Well, you made the point. They're focused on transportation. They've come out with scooters. We're in a company called Bird, which is the market leader there. That micro-mobility is a huge area of growth. I think people today in LA, where you are, it's going to be increasingly the mode of transportation for 80–90% of the sort of sub-2 mile transportation. And if you're in Santa Monica,
you think that transportation's profitable, though?
Yes.
You do. So you think actually the scooters are significantly more profitable? That's where the margin is relative to the cars where you have a driver.
The scooters are incredible because what happens is you put scooters out there without any advertising or whatnot, people start driving around. Like, that's unheard of. And in the markets that they're in, it's incredibly explosive. It changes how people go around the city and think about transportation.
How much of the bet, though, is on autonomous vehicles long term in terms of the way you think about this company ultimately getting to profitability?
Yeah,
does that
matter? That's an enormous vector here, right? If you look at the underlying economics and you layer in autonomy, i.e., taking out the driver, the economics get much more positive. I do think it's a wild card for all these guys. We're in Optimus Ride, which just announced they're going to roll out in Brooklyn Navy Yard in New York City. So autonomy is coming. Who are the winners and losers in that? Google has a big bet with Waymo. GM, which is an investor in Lyft, has a big investment there. I think Lyft and Uber and these guys do have a card on the table in autonomy, and that could pay off enormously.